Today, Bitcoin dips after climbing to $64,000 over the weekend. Robinhood says the SEC could be preparing enforcement actions against its crypto business. And Kline of Bitcoin IRA breaks down the macroeconomic environment's impact on crypto markets. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Bitcoin dipped into the red to start the week, but that's after it climbed up to the $64,000 level over the weekend. By noon Eastern today, Bitcoin had fallen back to $63,000. Ether also down this morning to just under $3,100, but Solana is up, trading at $153. Okay, let's talk about the top stories. Robinhood says it could be preparing for potential enforcement action by the SEC. The investing platform said in a filing today that it received a Wells notice from the regulator over the weekend, which said it made a preliminary determination that Robinhood could face potential enforcement action over its crypto business. Robinhood's chief legal, compliance, and corporate affairs officer said the company believes its listed assets are not securities in a blog posted today, and that the company looks forward to engaging with the SEC to make clear just how weak any case against Robinhood Crypto would be on both the facts and the law. The Post also said Robinhood Crypto doesn't list tokens or provide products that the SEC alleged are securities in past enforcement actions. In February, Robinhood disclosed that it received subpoenas from the SEC regarding its crypto operations. Shares of the stock were up 1% as of noon Eastern. The company is also due to report its earnings this Wednesday. Next, federal prosecutors have accused former executives of crypto lender Cred of defrauding customers. In a press release on Friday, the Northern District of California announced a grand jury charged Cred's former CEO, CFO, and CCO with conspiracy, wire fraud, and more. Prosecutors allege that the executives caused losses of customer cryptocurrency assets that could have a value exceeding $780 million. Cred was a service that claimed to pay out high yields for customer deposits, but it filed for bankruptcy protection in 2020. All right, going back to markets for our main story, I spoke to Kline, co-founder of Bitcoin IRA, about Bitcoin's price action over the weekend and how the macroeconomic environment is driving crypto prices. Let's talk about the price action to start. Bitcoin a little bit in the red today after, kind of a big increase over, not a big increase, but a nice increase back to the $64,000 level over the weekend. So what do you make of the way we're starting the week now?
It's these dips and swings are kind of expected in a post-halving environment. It's been seen in prior cycles before. The difference I think that we're seeing with this one that's causing a little bit more unexpected results is we have this new cohort of ETFs that are involved. They weren't here for the last cycle like this. And when you get ETFs, it's awesome, right? You get more mainstream adoption, easier accessibility. You also get a greater percentage of first-time Bitcoin investors. And these folks have to get used to things like what is a halving, the constant volatility, the stream of salacious headlines that we see out there, and always the claim that if it goes down 10%, Bitcoin is dead. So they have to get comfortable with these realities and this ongoing cycle. You see it also happening with Sunday afternoons. Big pickup in the crypto markets in Sunday afternoons, about 3 or 4 of the last 5 or 6 weekends. And then there's a cool off on Mondays. So that's probably what we're seeing here today.
So if we have these two big catalysts, we've been talking about them for months, the halving and the launch of the ETFs earlier this year. Those are behind us now. So what is driving things, in the medium term? Is it the macro environment, and what are you expecting from the price action going forward? Is it, kind of the chop that we've been seeing, or is there something that you are focused on as you watch the prices?
Well, nobody can deny that there's a summer solstice with all investment vehicles. At the macro level, we are in an election year, so that's going to have a different cycle to it than traditional summers. You see some downward pressure already happening. There's always been that sell in May, go away mentality, but it's not necessarily true when you have assets that are trading 24/7 these days. One great thing, and I think that we're going to chase these accomplishments, Bitcoin achieved the 1 billionth transaction this weekend. Probably didn't have a lot to do with price moves, but it's a milestone in the network, and it's an exciting time.
Why? Wait, let me pause you there. What does that mean? We have so many new investors in this space over the last couple of years. So how should they see that? What should that mean to them?
Oh, well, just maturation of the market. It's starting to grow up. It's still a teenager, right? It's about 13, 14 years old, but now it's getting into the high school years and it's starting to figure out itself and it's growing. And you're going to have more of these transaction and milestones that happen. I was joking with the person that told me the billionth dollar one today that I can't wait for the trillionth dollar one. And I'm sure we're going to wait a lot less time to get to that point as more mainstream adoption starts to come in. Institutions have to wait 90 days, like RIAs and some of these groups have to wait time periods to get fiduciary approval to add these assets. So even though they launched in January, we're just now starting to see some of these larger institutions be able to deploy these types of assets. So it should accelerate over time, but it just goes to show you I got into this game in 2016, 2015, and I was late to some of these guys that were early adopters that were buying pizza with Bitcoins, right? When we were early in the network transactions. To be at a billionth is just, it's something that you want to celebrate as a milestone as a network.
Some good news out of the Federal Reserve last week. I think that's how markets took it, with Jay Powell saying that the next move from the Fed is not likely to be a rate hike. What does that mean to you? We talk about correlations a lot here. So
yeah.
Does Bitcoin kind of participate in this risk on momentum? What does something like that, what Jay Powell said, mean for Bitcoin specifically? And, given the catalyst that we're coming off of now and this kind of, reset, wait and see moment that we're in, do you expect any more reaction?
Yeah, obviously, Bitcoin is not in a vacuum, so it exists amongst all of these activities that are happening, and it has some correlation to these. It's like other major assets. There's this kind of buy the rumor, sell the fact of every one of these meetings and announcements. But I think that they are short-term distractions. The fundamentals really haven't changed. We're still kind of on a runaway train headed right towards the edge of a cliff with things like debt, having to refinance, and pay interest on that debt increasing because of these rates just as a country. Think of it like our credit card, which Americans have pretty maxed out credit cards. It's the most recent report from Discover showed that. So macroeconomically, all these things are impacting Bitcoin. But what's happening, part of the reason why people love Bitcoin is its finite supply, and having enforces or reinforces that reality by constraining the supply over time based upon the reward. So at the time when that's happening, for the first time since June of 2022, the monetary supply production has gone back into the positive. So as crypto guys like to say, are they turning the printers back on? They most likely we might be headed in that direction. This is an election cycle, so a lot of things can happen up into that election and then for the first year after. But we're all not sitting in a vacuum, and Bitcoin exists in this space in a whole new way with these ETFs. So in general, it's a perfect storm for some exciting things to happen, and getting off zero is pretty critical for anybody that's looking at Bitcoin or crypto today.
It's been almost 6 months since the launch of the ETF. So to finish, I just want to get a sense from you what, of your connections in the RIA community, what has the feedback been so far on these ETFs? Because that was really a big selling point on the ETFs. We heard so much about how there was this great need by the advisor community because they had clients who were interested, or they themselves were interested in talking about it with clients, but, they didn't really have a vehicle for it. So what, has the feedback been so far?
Generally positive. Obviously, they have to get comfortable with the market too. They're more trained in the traditional asset types, so this is a new world for them. But at the end of the day, the markets are all better for it. There's access to something. There's untapped capital. This is a piece of that. Our platform is more focused on the individual retail outside of the RIA, but doing it within their retirement vehicle like an IRA, a Roth, simple. But in general, I think there's a positive sentiment, but there's a comfort level that's coming as we grow into it. And they have to, just like what there was a big kind of sell the rumor or buy the rumor, sell the fact happening with Hong Kong last week. There's a lag to these things. You don't just turn a switch on and all of a sudden everybody's buying ETFs. Market makers have to get into place. Approval with risk groups and compliance have to happen. And then inevitably, you'll start seeing some more flows to them.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.